Good afternoon. This is Chris Brecher with Simpler Trading, the Chart Patterns Mastery, August 1st, 2023 nightly video / free video. What's today about? Bond market still getting nailed. So you have an alternative to stocks. That's the 10-year note. So if you put this as TNX, you'll see that right now it's where it was. Guess what? Right here, October of 2022, markets didn't do so hot back then. So little danger in there, but nobody seems to care at the moment. So all we can do is trade intraday with an eye out for any kind of topping formation. When you see this, that's just not a top. Now, let me just tell you that when I've seen this in the old days, so I saw this in the old days, when 1999, 1987, this is the kind of stuff that happened. So number one, you had the bond market getting torched. I'd be happy to show this. I think it's really interesting. So this is 1999. So you had over here. There, you had the bond market getting destroyed. Really destroyed 1999 to 2000. On the right, though, the SPX was going parabolic. Yeah, that's what happens with a meme. Like right now, the meme is the AI. Back then, just the internet in particular and e-commerce and all that. So there you go. So on the right is the parabolic, the grinding up move into all the way 1999 right here, really sharp. But what happened? It started to stop going up fast. That's number one. Number two, you could form a defined trend line. Right there. And you don't have anything like that now. So take that on the right, and then on the left, I'm going to show you the SPX. And I hope you see what I'm talking about. You don't have a defined trend line yet. Are you probably going to get some topsy-turvy stuff like in here and in here? Sure. But the point is you need to see it finally form some defined trend line. That's what you're looking for in here, and you just haven't seen it yet. And that's definitely what I'm going to be watching for the next month. August and September are historically weak, especially with the bond market getting torched. So the first thing I'm going to do is look for that for long term. Now, when you go to short term, here's a daily chart on the left. And this is the S&P. Actually, the NASDAQ, it's a little rough because on one side you have the AI stocks that are keeping everything afloat. On the other hand, you have interest rates going up, which definitely hurts high PE stocks. So that's why this can go on for a while. And as you see on the right, I just have to see more of a defined break. The ideal is a break and then a rally back to the underside. So that break would result on the bottom in an oversold MACD. And then you have working off that oversold by kissing the underside. And that's what I'm going to get really bearish. The other thing that I think is going to be a big tell tomorrow. That's a classic buy signal of what I'm trying to teach in classes or in our room. Oversold, or let's say near the zero line, hooking up, that's the short-term MACD line, and this over zero. Over the ATR trailing stop and the 50. But it closed on the low. If tomorrow we get down to here, 45.69, this line will hook back down. That means to me that all the stocks that I've looked at that had buy signals have to be in question, that have like a blue line here, a red line hooking up. If this fails, then a lot of them can fail. So that's what I'm going to be watching tomorrow real intently. And looking during the day for bull and bear flags. On the bottom, I was showing the room how to construct bull and bear 2-minute flags and 5-minute flags. So have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.